I'm fascinated by the Coca-Cola earnings where they basically had no unit growth, and it seemed like good organic revenue growth was all pricing power. Is pricing power going to evaporate as nominal GDP evaporates?
Pricing power is already becoming more difficult, and that's because the general state of the consumer is becoming more difficult, and most importantly, the general state of the low and middle income consumers is becoming more difficult. Very little excess savings left, much less real wage growth, especially because that group is spending more on the higher inflation areas like food and energy, and those low and middle income households just haven't had that boom coming from stock market gains. They have less than 5% of their portfolio there. So back 2 years ago, you could have pricing power because there was money to go through. That money is evaporating, and the spread between the haves and the have-nots is becoming much larger. Depending on what you sell and to who, that's either good news or bad news.
Well, the federal government seems to be responding. They're cutting interest rates from a fiscal perspective. Lots of spending plans out there from the government. Is that enough to sustain, to lift this economy, including, I know you're bringing back the K-shaped economy discussion for the folks that have not been participating. Is that enough to help those folks, do you think?
Well, it depends where it goes. And I can't believe we don't talk every single day about federal spending. It has been so extraordinarily disruptive to every single economic model that exists, and it has changed the way that we have to evaluate the cycle. But problematically, we see these deficits rise and spending increase, but net interest spending is now larger than defense spending. And if we're spending government money and it's going to pay treasury holders outside of the United States, that's not helping everyday Americans. It's not boosting growth, and it's not actually inflationary either. So it isn't just about the amount of government spending, which is just chaotic in terms of how it's changing the way the economy operates. It's where it's going. And defense, net interest spending, even entitlements is not going to be the juice that fuels this extended, continuous, resilient aggregate economy.
I agree with the concern about the federal debts and deficits and all that, but a lot of folks will come back to me and say, hey, interest rates are still relatively low. People are buying our debt like crazy. Don't worry about it.
Well, I don't worry about it so much from the, there's going to be a bond market collapse moment. I mean, the risk of that just empirically has to be higher now than it was when we didn't have near record levels of debt to GDP. What concerns me is that at a certain point, we're going to hit up against limits. And if the main support, the main pillar that is driving the so-called soft landing is government spending, sometime in the next 4 years, we're going to have to take a step back. And if the Fed is not focusing on this and the fact that they actually probably can't keep rates super high, it will lower future government spending, then I would be really surprised.
But are they too data dependent? You and I shared a stage in, I think it was Toronto, I can't remember. But, you know, the bottom line, Francis Donald, is we're addicted to the parlor game. We're addicted to data dependency. And all I can say, Paul, that hasn't worked out.
No, it hasn't
What's
worked
a new
out.
approach?
We cannot be month-to-month data dependent, and I know the market runs off of this, but there's a couple reasons why. First, we have huge election uncertainty. It has paused business decision. We see this in surveys, small business surveys, ISM manufacturing. Companies are saying, we're just holding off. So that's a pause. We have really low response rates on a range of our economic data. And then related, we have sizable revisions. So we're seeing these sizable market moves, perhaps even policy decisions that are coming off of month-to-month movement. We are in the dark, or at least the moment of the day where the dusk comes in. We cannot see fully.
Listen to her.
So the Federal Reserve is going to have to focus on that 6 to 12 month view. And what they're likely seeing is the unemployment rate has been creeping higher since January of 2023. Inflation looks relatively contained. Inflation expectations are all right. Low income, medium income consumers expressing concern about the labor market. They have to calibrate policy back to that more neutral level. And I hope they're not looking at month to month data and that they're looking more at 3 to 6 month trends. If they are, it's a continued easing cycle, at least down to 4%, maybe beyond that towards 3%.
What's your view of the U.S. economy here? Is it resilient, or do we really still have to think about a recession?
Can I to be bold and ask which U.S. economy, because I'm having trouble just thinking about one U.S. economy right now. If I aggregate all of the parts, real difficult to get 2 quarters of negative GDP, in part because of how much government spending is coming through. So I can't be in the recession camp because that's not formally a recession. But if I look at manufacturing has been contracting in the U.S. since 2018. Yeah. Industrial production is smaller. Existing home sales are 30% below where they were before COVID. They're at the level they were in the great financial crisis. Small businesses who employ 80% of the population are the most negative they've been since the great financial crisis. So on aggregate, things look good, supported by a really strong high income and CEOs, but the rest of the economy is dicier.
Francis, we don't care. All we care is that the Rangers scored with 54 seconds and that Brzezinski scored at 2:05. They clocked years in my Montreal Canadiens 7-2. It's another difficult year, isn't it? It's a rebuilding year.
A rebuilding year is a good way to think about it. I would agree with you, Tom.
You should see the RBC tickets at the Forum.
Oh, fantastic.
That's why she went to RBC.
Yeah,
I couldn't possibly comment.
Francis, thank you so much. With RBC, I can't say enough about her research. Get that from the Royal Bank of Canada, RBC Capital Markets. We protect the copyright of all of our guests, even Francis Donald.